Hi, yes, good afternoon, everyone. So it's 11. We will start the session now. Before we start, we'll do a sound and visual check. Please type in the chat if you're able to see my screen and if you're able to see the screen on the see my slides on the full screen, and if you're able to hear me. Yes. Okay, I see some yes, sir. All right, good, good. Okay, good. Thank you, Suliang. Thank you, Victor and Vivek. Okay, so we will proceed. Okay, so if any point in time the screen sharing stop or if there's any issue with the sound, do let me know. Okay, so this is the session today will probably stretch over an hour, but I'll try to go on pace and hopefully we just complete as necessary. Yeah. Okay. So for the session today, the topic today is a focus on the Japanese yen. Today we are doing a track on the Japanese yen, and the topic is whether it is near a point of inflection. My name is Sihan. You can call me Sihan or Mr. Yo. I'm from the CFD team and also part of the HQ dealing team. So if there's any issue if you like to do trading via Philip, you don't have account yet, you can come and look for us for the HQ dealing team. Right. Okay. So before I start, some disclaimer. So the data from this in the slides are all from public sources. So as much as possible, I try to keep it updated and accurate. But if there's any changes on the public sources, I may not be able to capture it and may not be updated here in time. The second disclaimer is that the presentation is for general information purpose, so it's not tailored for any individual. So do take some time to make your own decision before doing any investment. And then for today, the topic is on CFD. So CFD, to take note that it is a margin product. So the profit and loss when you do CFD trading can be magnified. Something to note as well. Yeah. Okay, so yeah, let me just adjust my screen a bit. It's not showing up correctly. Okay, sorry, yeah. Sorry, the camera wasn't on just now. I'm so sorry. Yeah. Yeah, no wonder it's not showing up correctly. Okay, can. Right. Okay, so now back. Okay, so now we are talking about what we'll go through today. Okay, so it's in three parts. The first part is on a product intro, CFD, as well as the focus for today, FX CFD. And then the second part will be look at the historical price movement of the Japanese yen. So we will explore the rise and fall of the Japanese yen from 1970 until more recent time. And then after that, we will bring the timeline closer to current times. So we will take a look at the current JPY price and to discuss if it is near an inflection point and what will be the outlook. Okay, so the first part, product intro. Okay, so for today we are talking about CFD. Okay, CFD is a contract between you and our company or to settle the difference between opening and closing price. It is more suitable for traders rather than investor. Because for investor, you may do a buy trade now, but you may not have any plans to sell the share. Whereas for trading, when you go into a trade, you already have some visibility on a possible exit price or possible exit timeline. So CFD is more suited for trading, and then that's why it is only focused on the opening and closing price. It's not concerned with share ownership. It is more concerned with the profit or loss based on the differential in pricing between the entry price and the exit price. So with CFD, you can do long or short trade, and we'll illustrate with some examples here. Okay, so for the first example, we are doing a equity CFD trade. So what we do here is we are buying 1,000 contracts of a capital CFD at $7. So when you do a buy trade or what we call a long trade, we will want the share price to go up. Or if the share price goes up, then we make a profit. If the share price trade down, then we make a loss. So in this example, we purchase at 7, we close out the trade at 7.50, and the price differential is 50 cent. This 50 cent translate to a profit, and then after commission, then the profit is 4.50. Okay, conversely, you can also use CFD for short sell. So using the same example, if we short sell instead of buying, we do a short sell on Keppel CFD at 7. But unfortunately, the share price goes up. Or when you short sell, you will make a profit if the price goes down. But in this case, the price goes up. So in this case, there is a net loss of $500. And after commission, the total loss is 550. Yeah. And okay, do note that in these examples, right, I indicated commission on buying and commission on selling. But then for CFD, we do offer intraday amalgamation across buying and selling. Also, what this means is that if on the same day you buy some CFD, and then on the same day you close out the trade or you do a sell trade, okay, we will amalgamate both the buy and the sell, and then tabulate your commission based on the amalgamated total. So there'll be some possible commission saving for you if you do intraday buy or sell. Because there's amalgamation across buying and selling. So this is unlike stocks. Stocks, there's only amalgamation in the same direction. Amalgamation intraday for buy and buy trade, and then for intraday sell and sell trade, but not across. Yeah, but for CFD, we offer amalgamation across buy and sell trade. Okay, all right. Okay. Now, let's take a look at the difference between normal stocks trading and CFD trading. Okay, firstly, for normal stocks trading, you're not able to do short sell at all. So for foreign shares, we will check your shareholding, and then if you do not have the shares, then our system usually will not allow you to do any selling. So there will not be any occurrence of a short sell for foreign share. But for Singapore share, our system will not check your shareholding. Our system will check and allow you to sell based on the sell limit. So if you have sufficient sell limit, you will be able to do a short sell, but you will need to buy back the share intraday on the same day. If you do not do that, then your account will be subject to penalty by SGX, which can amount to quite a bit. Sometimes it could amount to $1,000. Or another option that you have is you can consider to borrow share from us, or to do a short sell and then borrow share from us. But to borrow share from us is a multi-step process. You need to inform us when you borrow share, and then when you buy back the share, you will need to inform us again. So there's a bit of processes involved. So unlike CFD trading, CFD, you can do short sell very easily. All you need to do is have a CFD account, sufficient deposit inside, fulfill CKA requirement. Then you can just short sell at your own time, everything online, using either the Poems internet platform or the Poems mobile platform. Okay, another difference is that for normal stocks trading, you cannot do leverage trading unless your account is a margin account. But for CFD, all trades are leverage trades. Also, we allow up to 10 times trade for equity and 20 times leverage up for indices and FX CFD. Okay, so on the topic of leverage, leverage is also known as margin or gearing. CFD is a margin account. So, and when you trade CFD, your profit and loss will be magnified. So we illustrate with example. So assuming you start the account with 10,000, and with this 10,000, you buy $30,000 of equity CFD, meaning you're using 3 times leverage. And then assuming if the market moves in your favor by 10%, so your 30,000 position become 33,000, meaning you make a profit of 3,000. But because your initial capital outlay is only 10,000, so your net return on investment is 30%, meaning the market move in your favor by 10%, but your profit from the trade is 30%. Because this is on the principle of 3 times leverage. But conversely, market may not move in your favor all the time. There might be times when it moves against you. So assuming if you start out with 10,000, you buy 30,000 of CFD, market move against the direction by 10%. So there is a net loss of 3,000. But this 3,000, based on your initial capital outlay of 10K, translate to a 30% loss. Again, this is based on the principle of 3 times leverage. Okay, so for CFD trading, you can trade equity. and ETF CFD. Okay, so what this means is that okay, let me just switch back to. Okay, all right. The available products for CFD trading will be a listed product, for example, equity and ETFs that are listed on the public exchanges. But do take note that if you trade CFD, you're not trading actual share, but a contract of it. Uh, but most of the major listed counters will be available for CFD trading here. Or for example, the counters in S&P 500, or the counters in Singapore STI, or the counters in say the Japan Nikkei 225. So all these are major counters, popular counters. We will avail them for CFD trading. And then also besides the listed counters and ETFs, we also offer in-house indices. These in-house indices are built by our own product team. The main advantage is that you can trade extended hours outside of the normal exchange hours for these in-house indices. And then we also offer commodities CFD, as well as Forex or CFD, which is the topic for today, Forex CFD trading. And for equity and ETF CFD, you can trade more than 5,000 different counters across 11 exchanges, or including the three big exchanges in the US, Nasdaq, NYSE, Amex. As well, for Europe, we only offer London stock market counters for trading. And then for Asia, we offer Japan, Shanghai, Shenzhen, Hong Kong, Malaysia, Singapore, and Australia. Recently, we also launched this Thailand SDR, Singapore Depository Receipt. These are actually listed on the Singapore Exchange, but is tracking the movement of Thai listed counters. Yeah. So it's a derivative product. Yeah. Okay, now we take a look at the in-house indices, which are also popular with our clients. We presently offer 15 in-house indices, and you can trade these even outside of the normal exchange hours. So for US, we have indices tracking the S&P 500, and then the Nasdaq 100, which is a US Tech 100, and then the Dow Jones Index or Wall Street Index. For Europe, we have the index for UK 100, which tracks the FTSE 100. For Asia, we have China A50, Hong Kong Index, Hong Kong Tech Index, which is more specialized, focused more on just tech stock listed in Hong Kong. And also the H Share Index, which is tracking Chinese shares that are listed in Hong Kong. One thing to note is we also offer Taiwan Index. This is quite unique, quite different. You don't find this everywhere, so you can consider trading CFD in-house Taiwan Index if you are looking to trade, participate in the movement of Taiwan stock market. And then for Japan, we have two. One is Japan 225 and Tokyo Index. Singapore, we also have two different in-house indices, the Straits Time Index, Singapore Index, and finally, we have the KL Index. Okay, for commodity CFD, we have the gold and silver for precious metal. For oil, we have US oil, which tracks the West Texas Intermediate, and the UK oil, which tracks the Brent crude pricing. So you see the this dollar value behind all these contracts. $1, it means every price movement is translates to $1 in profit or loss. And then $100, it means every 1 point movement, it translates to $100 profit or loss. Okay, and then finally, we come to the FX CFD trading. Presently, we offer 39 currency pairs and across 12 major currency, or including the, you can read together with me, is Aussie, Canadian dollar, Swiss franc, renminbi, euro, British pound, Hong Kong dollar, Japanese yen, Kiwi, Singapore dollar, Thai baht, and US dollar. Okay, interestingly, we some unique features is that we offer the renminbi trading, the US dollar renminbi currency pair, as well as the US dollar Thai baht currency pair. So again, you don't find this in a lot of places, but we offer them here. But for the focus today is on Japanese yen. So let's take a look at the currency pairs that we offer that are Japanese yen related. So we have the most popular one is the US dollar Japanese yen. From here onwards, I'll call this the dollar yen pair. So when we say dollar yen, it's referring to the US dollar Japanese yen. And then the next major block that is popular with clients is the euro yen. And then also we have the pound yen. Singapore dollar yen, which is popular with local traders. And then also we have the Aussie yen, the Kiwi yen, and the Swiss franc yen. In total, 7 different Japanese yen related currency pairs. If you're new to FX trading, this is how to interpret the naming. So we have a primary currency and then a secondary currency. So for example, the dollar yen of 146, it means that we are buying the dollar, selling the yen, and $1 translate to 146 Japanese yen. So similarly for euro yen 158, it means €1 translate to 158 Japanese yen, and so on and so forth. And then for example, there's also the euro dollar, which means 1.08. €1 translate to 1.08 US dollar. So when we trade currency pairs, what we are doing is we are buying the primary counter and we are selling the secondary counter. So over here at Phillip, when you trade FX CFD, there's 0 commission, and we also do not charge finance fee. Also, it's a $0 commission when you trade, 0 finance fee when you trade. But do take note that if you trade FX contracts, there's this thing called the interest differential. So you will earn interest on the currency that you purchase, and you will need to pay interest on the currency that you sold. And then because every time you trade Forex, it's a currency pair. So you need to have one side, you'll be earning interest. On the other side, you will be paying interest. So this net differential of interest is termed also as a swap point. And then we offer this swap point heat map where you can check out whether is it a positive swap point or negative swap point. So on this website, right, on phillipcfd.com, research to swap point heat map, you'll be able to see this table over here, which has a blue and red color. Okay, blue color means that it's a positive swap point situation. You will receive crediting of money if you trade it. Red color means you have to pay, there'll be some money debited from your account or if you hold a position. Let's take a look at, for example, the euro Japanese yen over here. Okay, you can see my mouse cursor, euro Japanese yen. Okay, over here we see that it's blue color, deep blue on the buy side and deep red on the sell side. So what this means is that if you do a long trade, you buy this euro yen pair, you will earn a swap point, positive swap point. And conversely, if you do a short sell on this euro yen, you have to there'll be money debited from your account. Okay, and then we take a look at the actual example. Okay, this client purchased a US dollar pair, and then he received a 76-cent credit. So this is an example of a positive swap point trade. So there's money credited. And the direction of this swap point, right, can change depending on the swap market environment. So for example, we take a look at this other example, which is the Canadian dollar Singapore dollar trade, or Canadian dollar Singapore dollar trade, this one. Okay, so on this date, right, 3rd of August, okay, this client did a buy trade of 150,000 and he received $4.20 as a positive swap point. But then a few days later, on the 7th of August, he did the same trade, 150,000 buy on Candy Singapore dollar trade, but it become a negative swap point situation. Also, this usually occur if the interest rate of the two currencies are very close to each other. Also, the swap market can switch, and then you may either get a positive or negative swap adjustment. Okay, so if you wish to trade CFD, these are the available platforms for you to trade. You can trade on Points Internet as well as Points Mobile. And recently we launched MT5 trading for CFD. So you can trade CFD on MT5 as well. But you need to activate MT5 if you wish to use it. So you can activate it on Points Internet. You go to Account Management, CFD, MetaTrader 5. Over there, you can click on this thing that says Add Poems MT5 CFD account. And then we'll send you an email with more instruction on how to activate MetaTrader 5. And over here, we have you can also activate MetaTrader 5 for CFD trading on a Points mobile app or Mobile 3 app. So open the app, log in, and then click on Me, MT5 CFD. And same thing, you'll see this orange color button that says Add Poems CFD MT5 account. And then similarly, we'll send an email to you with more instructions on how to proceed further for MT5 trading. Okay, now we move on to part 2, which is looking at the rise and fall of the Japanese yen in the historic time. The reason for this is we want to understand what happened in history, because a lot of the events that occurred historically have an impact on the Japanese yen today. And it also gives us a gauge of where the yen could be headed next. Okay, and this is the chart that shows the Japanese yen from 1970 until current. So our story began in 1971, where the US removed the currency peg from the gold standard. So prior to that, the US dollar is valued based on the price of gold. So, but this become unrealistic and not possible to implement in the real world. So in 1971, the US was forced to remove the currency peg from the gold standard, and the currency were allowed to float. So once they did this unpegging, you can see the market reaction. So the yen immediately strengthened by more than 10 or 15% from about 360 to about 300 yen to the dollar. So this reflects the actual value, meaning the yen at this point was undervalued. So once they remove the peg, market forces it to correct to the perceived value of the yen. And then after the US initiated this exit from the gold standard, other currencies also follow suit. So about 2 years later, Japan also exited from the fixed controlled currency system. And again, with this exit, right, immediately market moved, and then the yen again surged by 30%. But then from here onwards, then the yen become a free float currency. And then in 1973, there was an oil crisis, so there was a rebound in the yen, or the yen weakened again. But then very quickly, the yen strengthened further because the fundamentals of Japan in 1970s and early 1980s were very good. That trade was very strong, or they had a lot of trade surpluses. So all these added to the market perception of the yen should have a stronger value in the currency market, which is why we see a very significant strengthening of the yen from 1977 to 1979. And then, but then after that, there came a second oil shock, and then the yen weakened again. Okay, then now we further down the road, right, in 1985, this is a very key moment in the history of the yen and for many currencies. In September 1985, at this point, the US was very strong, and the US government alone, right, were not able to effect changes to the value of the dollar. So what they did was they engaged the help of 4 other countries, namely Japan, Germany, France, and UK. So collectively, these 5 big economies at the time they came together. They agreed that the dollar was too strong and it was causing a lot of trade issue, not just for the US, but it was also threatening to spread across globally, which was why the four other nations agreed to help. And collectively, they signed the Plaza Accord with the intention to weaken the yen, weaken the dollar, and strengthen the other four currencies. So with this concerted effort, right, it was this signing this Plaza Accord was a success. It managed to immediately weaken the dollar and strengthen the other four currencies. But what happened after, however, was unexpected consequences because it resulted then in an uncontrolled strengthening of the yen for the next 10 years, from 1985 all the way to 1995. For the first 5 years, actually, it was still okay from 1985 to 1989. For the first 4 to 5 years, for the Japan economy, they can still stomach the stronger currency. So there was no issue from 1985 to 1989. And in fact, these 4 to 5 years were considered the golden years for Japan, or the golden 80s for Japan, 1985 to 1989. And okay, let me just bring forward to the next chart to understand what was happening at that time. So from 1985, right, the Nikkei 225 was only trading at about 10,000 or 10,000 level. But then within a short 5 years, it tripled to more than 37,000. So, and this is not just for the stock market. This tripling in value also extend to the property market. So imagine if you own a property at that time, and then within 5 years, the value of the property increased by 3 times. That was how booming the situation was at that time. But of course, not all of it is fundamentally driven. A lot of it is speculative, which is why many term it as a asset bubble. And the bubble did crash on 1st of January 1990, as we can see from this chart of the Nikkei 225. So after tripling in value from 10,000 to 37,000, the Nikkei crash has a very severe crash to almost half of its value after. Yeah, okay, so so this is what happened from 1985 to 1990, a very booming period, what they call the golden year of Japan. It was also a consequent effect of the Plaza Accord because with the signing of the Accord, the yen strengthened, but it resulted in uncontrolled strengthening of the yen. And then, after the asset bubble burst, interestingly, the yen continued to strengthen further for 5 more years. This was probably due to a result of interest rate policy in the US and Japan, because at that time, US was reducing interest rate more quickly compared to the Japan. Both sides were actually decreasing, lowering interest rate, but US was lowering interest rate faster than in Japan. So there was a bit more fund flow into the Japanese yen, which caused further strengthening of the yen all the way until 1995. Okay, after that, right, then we will fast track a bit forward to maybe 2012 when Abe was elected as a prime minister. So at this point, when he was elected as prime minister, the yen was very strong at about 80 to or 90 to the dollar. But when Abe was elected as PM, right, his objective, he wanted to break Japan out of this cycle of weak growth and deflation. So he introduced many policies, one of which was to weaken the yen to make Japanese export more competitive. And as a result of Abe's policy, the yen did weaken after he was elected as PM, the yen did weaken. And then fast forward further, we to near post-COVID, last year in March 2022, when the US started to hike interest rate, that was when we see even further more weakening of the yen. Okay, this is a zoom in of the dollar yen chart from here. So we are zooming into this more recent history now, from the near pre-opening after COVID. Okay, so this is the chart for the last 12 months. So we see that in the last 12 months, right, the yen had weakened by more than 30% against the dollar. So okay, so it started in February 2022. The yen was trading at about 108 to the dollar. And then by November last year, 2022, it has strengthened to about 152. After that, it did strengthen a bit before weakening again to current level of 147. Which brings us to the third, to the question for our current webinar. Is the Japanese yen near a turning point or inflection point? And what's the outlook for the Japanese yen? To understand that, right, we will need to take a look at Japan's interest rate. So okay, let me see here. And okay, and US interest rate. Okay, so we see that beginning March 2022, the US Federal Reserve have been hiking interest rate and hiking interest rate very aggressively. So whereas in Japan, right, the interest rate is maintained at negative 0.1%. So what this does is that it create a interest rate differential and increasing widening interest rate differential. And this interest rate differential also translate to a carry trade opportunity. So what we mean by this is that because when two currencies have different interest rate, if you use the currency with low interest you borrow that currency and then you use that to buy US dollar denominated assets, you'll be able to earn higher return. Also, due to this, right, people were selling the yen and then using the borrowed yen or borrowing the yen to buy US dollar denominated assets. And they have to do this through the forex market, or they borrow the yen, they bring the yen to the forex market, exchange it for US dollar, use the US dollar to buy US dollar asset. So because they have to flow this through the FX market, that's why it is causing, it's driving the weakening of the yen since March 2022, that means for the last 16 months. Okay, and then here's another look at the chart. Okay, we see that presently it's trading at 147, which is very near to its last peak in October 2022. At that time, the last peak was at 152. Currently, we're at 147, just about a few dollar short from the last peak, which is why there's a lot of commentary, speculation mounting whether are we near a point where the trend will reverse. So some of the things that could affect a reversal, right, will be the central bank intervention. For example, in September, October last year, the BOJ intervened in the forex market. And then on these 2 days that they intervene into the market, we see the yen strengthening intraday by 3%. That means within 1 day, the yen strengthened by 3%. Which is why we feel that the current at the current level, right, 147. Okay, the last point when they intervene, the first time when they intervene was when the yen crosses over 145, the level, and then the second time where they intervene, the yen exceeded 150, and then at the most recently, right, the yen did cross 145 again, but then there was no action by the BOJ. So markets are saying that the threshold has been raised So most probably BOJ will intervene again if the level crosses 150, which is why this is one key zone to watch out for, 150 to 152. Or this is where we could see maybe the BOJ coming in to intervene in the markets. However, this BOJ intervention, right, is not is very short-lived. It's probably only for one day. It may not drive a more sustained change in the direction of the currency pair. So what will cause a more sustained, fundamentally driven pivot, right, will be we have to see if there's any shift in the monetary policy decisions of the central banks in Japan and in US. So we take a look first at Japan. What we want to do is to see, because this trend for the last 15 months, right, was driven primarily by this interest rate differential. So in order for this to unwind, right, we will want to see this narrowing of this interest rate differential, or a normalization of this interest rate differential. So we have to consider whether the BOJ, what are the odds of the BOJ raising the interest rate from current negative 0.1%. Recently, the BOJ governor, Ueda, has mentioned that the growth in Japan is still not very strong, and inflation still seems to be below their long-term target of 2%. In July, the inflation came in at 3.1, but the view is that inflation will trend down towards the end of the year. And this is the chart showing Japan inflation. We see that it is an uptrend. Which is why it's presently actually above the BOJ's target of 2%. But then, which is why no speculations are mounting whether BOJ will consider this to be enough. However, if we were to stretch back the timeline further to 25 years, this is the inflation rate of Japan for the last 25 years. Okay, we see that for the last 25 years, there were actually protracted periods of time when inflation is negative. So meaning Japan actually experienced several episodes of a deflationary situation. Or it's only very recently, due to the unusual situation we have with COVID and then the synchronous global reopening, which caused a supply glut and global inflation, that we are seeing inflation in in Japan exceeding 2%. But in normal times, actually, the inflation in Japan hasn't exceeded 2% for the last 25 years. And then if we were to stretch back the timeline even further to 75 years, okay, we see that throughout the 75 years, right, inflation in Japan only reached concerning level in the 1970s, or during this global inflation period, 1970s, when it exceeded 20%. But after that, right, inflation in US in the Japan is actually quite is usually sustained at below 5% annually. So and also, if you were to look at the employment and wage growth situation in Japan, which is also a consideration for BOJ, whether they will want to make any shifts on their monetary policy. So for Japan, right, the unemployment rate rose recently. And then also the jobless rate for women across all age group also increased. And then the job offer to applicant also worsened slightly. So all this suggests that overall there's a bit of weakening in Japan's economy. And this is also shown in Japan's quarterly GDP. We see that Japan, throughout the last 50 years, they have very good GDP in the 1980s, But after that, the GDP growth is pretty anemic, usually below 4%. And even a certain period is a negative, and then there's a recessionary as well. And currently it's only at about less than 2%. So overall, the current economic situation in Japan is still not very rosy. They are still trying to achieve higher growth. And so for all these reasons, I combine, we feel that my personal view is that the BOJ may not take action to make changes or major changes to the monetary policy in the near term. Although this is something that we will continue to monitor because Japan has been maintaining zero interest rate or even negative interest rate for a very long time. So market are anticipating for them to normalize the interest rate. But of course, if with interest rate differential, right, we don't just look at Japan, we also have to look at the other side of the currency pair, which is US. So what are the odds of the US lowering the interest rates? So in a recent commentary at the Jackson Hole Symposium, Fed Chair Jerome Powell has commented that there's a chance that interest rate will remain high and they may still increase the interest rate if inflation doesn't come down in the next few months at the required pace. And this is a chart showing US inflation for the last 75 years. So unlike the situation in Japan, right, where inflation is generally historically more muted, in the US, there's a higher concern that inflation may become uncontrollable. The reason for this is because in the 1970s, as shown on with these two pics over here, in the 1970s, there was a very sharp increase in inflation in the US, up to about 12%. And then although this came down eventually, it was followed by a second wave of high inflation. And this second wave of high inflation is even more aggressive than the first wave of inflation. The second wave of inflation reaches about 15% annually. And collectively, right, this first and second wave of inflation stretches almost 10 to 15 years. So it was a very tense period for the US Central Bank for this almost 10 years, which is why because of this previous experience, right, although currently in the US inflation has came down to about 3 to 4%, they're also concerned that whether this is a repeat of the 1970s, whether there'll be a second wave or a re-acceleration of inflation in the US, which is something that the US Federal Reserve will want to avoid. And yesterday, the US just announced their CPI for July, for August, sorry, yeah, for August. And then over here in the yellow chart, over here. Okay, and the data came in, right? It says the headline inflation increased, core inflation continued to drop a bit. But there's some concern whether in the next few months, this inflation will rebound. But for now, what we are seeing is the downtrend seems to be continuing for both the PCE as well as for the CPI, which are two measures of US inflation. And this is a look at the components for the CPI. Now we will go to the part where we have a discussion on the outlook. So we see that if you were to look back in October 2022, after it reached the last peak, or this dollar yen reaches a last peak of 152, it rebound, it inflected, and then there was a 15 to 18% strengthening of the Japanese yen. So presently, of course, the natural question is, will we see this again, as it approaches this key resistance level? This is another view of the chart. Another consideration is the price level pre-COVID. Because before COVID, before the unusual events brought about by COVID, the dollar yen pair, right, was actually trading around 108 to 110 as the level pre-COVID. So based on the current level of 145, 147 to the pre-COVID level of 110, it's a difference of 30 to 40%. So if things does unwind, then we could see this dollar yen having a 30 to 40% movement to pre-COVID levels. Okay, so presently we are having a offer for CFD trading, FX CFD trading. From now until 29 December, if you trade FX CFD, you'll be receiving cash rebate. But this is this campaign will end on 29 September. So in the next few weeks. So what you can do is, if you trade FX CFD, if you do at least 8 trades, you receive 20 CFD cash credit. And if you execute 28 more trades, that means making a total of 36 FX CFD trade, you receive 100 CFD cash credits, or another 100 CFD cash credits. In addition to this, we are also offering the micro Hong Kong CFD trading, meaning you can trade Hong Kong CFD from 1 unit instead of a normal lot size, and at a reduced commission of only 50 Hong Kong dollar. And if you're a frequent trader, you also will receive trading credits. If your commission is more than $500 per month, you will receive trading credit. And if you're a very active trader with more than 2,000 commission for the month, we will also lower your commission for Singapore, US, and Malaysia contracts. And we also have a refer a friend program. If you're a client with us and you refer another friend to us, you'll receive $150 CFD credit. Your friend will receive another 150 CFD credit. But terms and conditions apply. Your friend will need to do at least 3 trades within 2 months of account opening. And one thing to note is you need to inform us first, or fill in a form, a referral form. Both you and your friend will need to fill in a copy. Then we will be able to track and give you the rebate. And yeah, that's about it for today's webinar. And this is our contact details. I'm from the HQ dealing team. So if there's if you wish to contact me, here's my contact details. And some other slide before we look at the questions. So some important dates to note will be today, 14th of September, where we have the ECB interest rate decision. Presently, the interest rate in the Eurozone is 4.25%. And expectations are that the ECB will not hike interest rate at today's meeting. And also for later today, we will have data for US PPI, Producer Price Index. This will give us another gauge of whether the price pressure in the US is easing. And then on 19th September next week, we have the Eurozone CPI. And then on 20th September, the UK CPI. And on the same day, we will also have the US Federal Reserve interest rate decision. Presently, the US interest rate is at 5.25%. Expectations are that the US Federal Reserve will not increase the interest rate at this month's meeting. And also later next week, there's a UK bank decision, BOE interest rate decision. So as a summary of today's session, so in the last 16 months, the Japanese yen has weakened significantly, and this is primarily driven due to interest rate differential. Because the BOJ is maintaining interest rate at negative 0.1%, whereas central banks elsewhere are all increasing interest rate aggressively for the last 16 months. So because it's near the last peak level, so there's a lot of discussion and interest on when the yen will regain strength. So of course, some interesting things to note will be whether there's BOJ intervention, which will cause a very sharp intraday reversals. And of course, for more longer term view, we will have to check the to see if there's further normalization of US inflation, and also to assess the growth and strength of the Japanese economy, to gauge the pace and possibility of the dollar yen reverting back to pre-COVID levels, or from current 147 to pre-COVID levels of maybe 108 to 110. And along with this webinar, we have a accompanying blog post titled Exploring the Rise and Fall of the Japanese Yen. So you can find this on PhillipCapital.com under Education article. So you can go there to have a read on the rise and fall of the Japanese yen from 1970s till current, or for supplementary understanding of the history of the Japanese yen. Yep. So with that, we come to the end of the presentation. Let me just look at the questions that we have. Yeah. Okay, one question that we have is what's the difference between CFD and options trading? Okay, for CFD, you're trading based on the price difference of the counter. Also, it's a trade. You do not receive any premium when you do short sell of CFD. It's essentially a trade that you take to participate in the direction, or either the direction of the counter. So you can do a long directional long trade, or you can do a short trade. Whereas for option trading, when you sell option, you will receive a premium. So the mechanism, the structure is slightly different. And also with option, there's a chance that it can be exercised and converted to shares. Whereas for CFD, it is strictly contract based. You cannot convert CFD to shares. Okay, another question we have is CFD available 24/7, Saturday, Sunday? Okay, CFD is available when the cash market is trading, if you are trading equity CFD. So if the cash market is trading, then you will be able to trade the CFD. If the cash market is closed, then the CFD will not be available for trading as well. But for the in-house indices, you will be able to trade these based on the trading hours as specified on our website. So you can check out our website, PhillipCFD.com, to see the trading hours for in-house indices. Okay, and then the Euro yen, dollar yen, Singapore dollar yen, which is more popular? I would say the dollar yen is more popular. It's a more globally traded, more liquid currency pair, the dollar yen. Next in level will be probably the Euro yen and the Japanese yen. No, Euro yen and the pound yen. The Singapore dollar yen is probably more for local trader. Okay, and where to find the list of tradable CFD? Okay, you can find this on Philip. You can just check out, log into Poem's website, just type the counter name, and then over there you can if it appears as a CFD counter, then you can trade it. If there's any counter that you wish to trade and it's not available on Poems, you can let us know, and then we will check with our product team to see if we can avail it for trading. Or for example, recently one very popular inquiry that we received is for the ARM IPO in the US. So with this ARM IPO, right, because it's a new counter, so we will not offer it at the start for CFD trading. But if you do wish to trade it, you can let us know. We will check with our company to see if we can offer it for CFD trading as well, ASAP. Okay, and then swap point is it equal to interest charge or margin? Okay, swap point is only applicable if you trade forex, and then it arises because of the interest rate differential. If you buy a currency that has a higher interest than the currency that you're selling, then it's a positive swap situation. You will receive a swap credit, and the converse, if you buy a currency that has a lower that's paying a low interest than the currency that you're selling, then it's a negative swap trade, and there'll be money debited from your cash balance. Okay, can we recap what's the key event economic indicator for BOJ policy change? Okay, for the some of the things that the BOJ is looking at will be firstly the inflation. Their target is for inflation to be maintained at 2%, and presently inflation is at about 3%. But the view is that inflation may trend down towards the end of the year. So they are still hoping, at this moment, they are not looking to make major changes to their policy because they feel that eventually things will normalize. The current high inflation is only a temporary occurrence. Also, inflation will be one thing that the BOJ is looking at. So if inflation does maintain a high level, then that may cause the BOJ to take note and then maybe effect some reversal of their policies. Okay, some other factors that the BOJ is looking at will be the wage growth in Japan among their workers. So because wage growth is also a precursor for inflation. So if the wage growth situation is good, it is strong, then that may cause the BOJ to place a higher weightage on inflation being on high inflation being a sustainable situation. Right? Okay, I see. Yeah, I can't see any more other questions at the moment. Yeah, so if there's any question, you can also continue to type in the Q&A box. Okay, so I see some in the chat. Now, let me just look at the chat. All right, yeah, I think there's no other question at the moment. All right, okay. Okay, so we thank you for your audience and participation today, and do join us for our next session as well. We have webinars on recurring basis, And if there's any questions that you have, or if you wish to contact us, you can contact us at these contact details. Right? Yeah, thank you very much, and we'll see you again at our next webinar. Yeah, Charmaine and Vanessa, if you're around, you can help to take over.